Mortgage repayments start to bite. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee, and I thought we'd have a look at a post from a Facebook group, one dedicated to first home buyers that I just like to check out and see some of the posts occasionally. And this one is showing you a user where let's have a look. They're under, shall we say, some concern. Now, it's from an anonymous member. Let's read through the comments that they've put here. Hi, everyone. Or hey, everyone. I feel a bit silly asking this question because no one can predict the future. But I don't know what to do about my current repayments. Now, no one can predict the future. Even the Reserve Bank can't predict the future. Remember, interest rates are still meant to be at 0.1%, or at least the cash rate target is meant to be at 0.1%, according to the media reporting on the Reserve Bank. So we've got to keep that in mind. And they're just a tad bit higher. For those of you playing at home, we'll bring it up here. There you go. Got to get that chart in every time. I've got to update the date on that entry. I'll do that later. So, no one can predict the future. Since I purchased my first unit in July last year, my repayments have gone up $400 plus a month, which I understand isn't a lot compared to others. So it's $100 extra a week in repayments over a year. That's not too bad. Certainly other people are doing it much worse. And you know what? We'll just bring up this chart here. You know, this is the scenario a lot of people will face coming off the low fixed rate, the 1.99 sub 2% rates, to the average variable rate. Now you're looking at $1,400 extra a month, which will divide that by 4, an extra $352 a week. Pretty much what this lady, I'm assuming it's a lady, it may not be, is concerned about in a month. Some people will be experiencing in a week. It's going to be interesting. It's certainly going to be interesting. But the thing is, it's going to be those that bought during the FOMO. Like, this is the example I've mentioned before. It's someone who bought during this hysteria, the mania of the COVID period. So I understand it isn't a lot compared to others, but I'm concerned that it's going to get to the point where it's going to be something I can't manage. Hearing different opinions from people about whether rates are going to continue to rise or stabilize is so confusing. I mean, yeah, that's kind of the reality of it. You'll hear, one prediction here, another prediction there. This is what we see in the media all the time. And I mean, how many people have been waiting for a huge property correction here in Australia? Been waiting a decade. Even if say you're waiting 10 years ago, even if it fell from now, you still would have been better off buying back then and sitting on it. Since I'm managing with the current repayments, should I look into fixing my rate? Any advice is appreciated. Now, people will occasionally ask for my advice or the advice of viewers of the channel, and the suggestion I give to everyone is to get into Excel and do some scenarios. Look at your repayments, look at your budget, and scenario what would happen if shit hits the fan. If it's you and your partner, one of you loses your job, you both lose your job. What would happen? What would you do? Run the scenario. Worst case, if you lost your job, you've still got to make your repayments. How are you going to do it? You can't abandon your house. It's Australia. You drop in the social hierarchy. Could you live with family? Could you sleep in the car? Put a tent in the backyard? We're going to see people doing that. We will see some people doing that. Because here we're talking only $400 a month. This isn't it may be a significant amount to them, but it's $400 a month, guys. So it shows you this person was pretty close to the edge already. So they're looking to fix. Now, if they were to fix and say, rates were to go down, then they may be paying more than they should have. For a few years, they may be paying, thousands of dollars more in additional repayments. But that's the price they're paying for certainty for a few years. So you've got to weigh it up. What's the best thing that could happen is you fix and rates go up and then you're a genius. The worst thing that could happen is you fix, rates go down, you're paying more than you should have, but you feel shit because you're paying more, but you've got certainty and you can sleep at night. So that's how you have to sort it out. You need a scenario, run the scenarios yourself. Jump in the Excel, do that, or the Google or whatever. There should be free stuff these days. And look at it. So, any advice is appreciated, okay. I feel ours has gone up close to $500. But the scary part is we're not even at what the fixed rate was offered when we bought. I'm just going to ride it and hope it doesn't rise or raise by another 1%. If you can't afford much more, then maybe fix for 12 months. At least you will have some stability. Or you could fix a portion, half your loan maybe, and leave the other half on variable. I'd be surprised if it doesn't go up again a couple more times before plateauing then declining, but none of us have that crystal ball. We've just fixed half our mortgage. There's a few people here hedging their bets, fixing half and having the other half run. Because to be quite frank, no one really knows. We know we can afford the 3-year fixed rate, and if it comes down in that time when we pop out at 3 years, that will be great. The lower 3-year rate indicates, as above, the banks think it will come down. And this is again a win. It sounds like we are in a similar position to you. So, there you go. In my opinion, and this isn't advice, I wouldn't fix at this stage. Yes, there may be 1 or 2 more rate rises this year, but the economic indicators are pointing towards a slowdown of the economy and higher probability of a reduction in the cash rate in 23-24. Well, see, this is the thing. You've got to think about it. If you don't fix and you're paying extra, you're struggling for a year until it goes down again, is it worth it? What's the amount of money that you're paying in interest over that period? That's why you need to do the scenarios. Okay, you need to try and think about it logically and not emotionally. And what about your stress level? What about your stress level? That's something that people, I don't think, seem to take into account. You need to run some scenarios and go, oh shit, no, I fixed, I shouldn't have, oh no, I had to pay a bit more for a couple of years, but it didn't matter because I could manage it, I was stressed. Or it'd be, yeah, we fixed, we were so lucky we did because rates shot up again. We fixed, but the rates went down, we lost a bit of money. I guess I'm just at that, I'm demi-boomer, where I'm thinking stress mitigation is an important thing. Banks are reducing their 3-year fixed rates, which essentially tells consumers that they believe the cash rate will come down substantially within the next 3 years. Given this information, would it not be practical to lock in for 3 years, and when that period is over, it'd ideally be lower, so it'd be beneficial? Does this make sense? I've been wondering the same thing as the poster. Although you might be locking in at a rate that is slightly lower than the predicted rate with the next 2 rate rises, you'll be at a loss once the rates start coming down if the banks pass on the cuts. You'll most likely have about 6 months of being in an advantage, but 2.5 years paying more than the market rate. Or you could do 1-year fix. And this is the advice that people have provided to this poster from Facebook. So let's have a bit of a talk about that. So guys, there we have it. Mortgage repayments are starting to bite. Some people are feeling it. And this is not surprising. We know this is going to happen. Some people are riding too close to the sun. Can you blame them though? Can you blame them? It's such a pain in the ass to get a rental now. Everyone thought rates were going to be fixed, so they thought they'd give it a shot. You got to find a way to make it happen. I suspect people will. But we'll start to see that manifest in, well, retail spending crashing, or at least the demographic that are in trouble, which is going to be the younger ones. It's not going to be the boomers who are established. It's going to be the younger people who are the ones who won't be able to spend up like they have in the past. Smashed Ave, it's off the cards. Anyway, thanks for watching. Check out HeiseBim or Heise Does if you're interested in other content I create. And if you're a fan and want to support us, you can on YouTube or Patreon. Use our referral links, buy our pocket squares, or call us if you need an architect. Take care, have a great day, and I will see you all in the next episode of HeiseSays. Bye for now.